Welcome. I am Eric with Muathe.com, and I greet you, beloveds, in the love and in the light of the one infinite creator. So today we're going to be taking a look at the markets here for this weekend. It's going to be a shorter than normal video so that everybody can continue with their Christmas holiday family time. All right, so let's begin here. I'm recording this November 24th, 2021. Christmas Eve essentially, and US markets are closed. And for quick look at the markets here, we can see BTC right now trading at 51147, Ethereum trading at 4071. If we take a look at US markets, again they are closed for this Friday session. The Nasdaq was up 3% for the week. We can see that the Dow was up 1.6%, and we can see that the S&P 500 was up about 2.2%, and the big deal here is S&P 500 essentially closed at a fresh all-time daily and weekly closing high. So S&P 500 again closed at a fresh all-time daily and weekly closing high. For the week, by the way, Bitcoin is up about 9 to 10%, and we can see for the week Ethereum is up about 3 to 4% for the week. All right, let's go to that S&P 500 daily chart, and where we see that the S&P 500 again did manage to close at a fresh all-time daily closing high. So not a surprise if you're familiar with this concept. The market's been making all-time highs towards major holidays, so nothing new in this major holiday. Again, S&P 500 did close at a fresh all-time daily closing high, going above the prior daily closing high. This is a 6 months view, so we can say that as of Thursday the market did break out for a fresh move higher. This is a 6 months view daily for the S&P 500. If we take a look at this view, we can see the market's been coming back to test the 50-day moving average and spending a few days below it, but immediately recapturing the area above the 50-day moving average. This is a sign of a market that is still strong and has an appetite for higher prices as it continues to hug and use that 50-day moving average as a bounce area. By the way, before I forget, for the S&P 500, we can see that on the daily, if we go back about 15 months back, the trend line that the market's been holding continues to hold. So this is a trend line here connecting daily lows. And again, this past 2 weeks, in fact, this past week, the market came and tagged that line again and held. And before we know it, we are fresh all-time daily closing high. So in other words, as long as we stay above the blue line, staying above the blue line just means that this market is sideways to outright bullish. If the market at some point is going to be entertaining lower prices, then there's going to be a clear signal by the market breaking at the very initial move, breaking this trend line, maybe moving higher and then down. But at least what I'm saying here is a break of this price trend line is needed for there to be a signal that the market could be open to lower prices. Right now, all systems are bullish, especially if you go by the S&P 500. Now, if we take a look at almost 2 years of daily data, so capturing the lows of March 2020, we can see that there's also another trend line this way. So the previous trend line we drew was from here, November lows, and all of them, we can see the market is very aware of the trend lines and using them for support. Another way to look at this is take a look at the 2-year weekly, so 2 years of weekly data. And even here, if I take the weekly closing lows of March 2020, weekly closing lows there, and this weekly closing lows from last month, there is a trend line, should be something like that. And again, the market being very aware did spend some time, couple days below this trend line, but by the end of the week, the market was back above the trend line. Again, what this means is that the market is still bullish as long as it is above the blue line. At some point, we start looking at the possibility of lower prices if and when the market breaks this trend line, which is very clear and defined, that connects the lows of the market going back to March 2020. So a break below this line is needed. Otherwise, the market continues to be strong. Now, also on this weekly chart for the S&P 500, it captures nicely the RSI lows line. And also this week on Q, we tagged this line and of course we bounced and closing at fresh weekly closing highs after finding support on this very simple RSI trend line. Now that's one view. The other view is based on the uniformity concept, something I talked about in the last couple of weekend analysis videos. It's this trend line here, and I use it because it is where we see a breakout of the RSI in 2020. So this breakout here coinciding with a price breakout, and essentially that was a clean breakout. We haven't been back to those price levels since that breakout. So the breakout here corresponding with this RSI breakout. So what we do with that RSI level is draw a uniformity line, or a line where every time we bounce on this line with uniform action, it means that there is a bounce taking place in the market. So we can test that. And what we see here is good evidence of this because we tag the line here for this rebound area. We tag the line here for this couple pullback areas. We go below the line and back above it here, which is this lows. Again, over the last, let's call it 3 weeks or so, maybe a month or so, we've bounced on this line twice. So bring back the previous line, and we can see that also as long as this line is holding, or as long as both lines are giving support, it means that this market has a higher likelihood of being stable to outright continuing to record fresh, improved all-time highs. And should we break below this trend line here, that's going to be suggesting that the market now is due for a stronger pullback, a stronger correction. By the way, the S&P 500 on the monthly continues to hold the RSI above 69.1, and this is an area, as we know, that the market should continue being stable to bullish. Remember, the S&P 500 has been above this 69.1 threshold since about March of 2021. And if you are new to this concept, it can stay bullish or above 69.1 for many, many years if it chooses to. Also, let's not forget that we have a fresh monthly breakout. So really, S&P 500 is just being absolutely strong and resilient. This is a fresh breakout. As long as that breakout is successful, then this market continues to be outright bullish and stable. So that monthly breakout level for the S&P 500 is going to remain relevant because above this number, the market continues to be stable to bullish. And at some point, if we break below that breakout level, which is the monthly closing high from the month of October, that level is 4605.38 for the S&P 500. Anything above this number, and the market should continue to be stable to bullish. At some point, should we break below that level, then we can start looking for reasons to suspect that the market could be probing lower prices. For now, all systems are pointing to a good, stable S&P 500 market. Now let's return to that 6 months daily for the S&P 500. And what I note here is, yes, we made a fresh all-time daily closing high. The problem is where the RSI is trading. If we end up getting a pullback from current levels and we start pointing down, in other words, if this is where the RSI peaks out and doesn't move well above this level, we might end up seeing negative divergence on the S&P 500. In other words, this is a move to fresh daily closing highs, But we need to watch this RSI, because if it makes a lower low and confirms a lower low, then this negative divergence actually suggests that this move we had over the last day on Thursday, the 23rd, if this move is where we store and we have negative divergence, given the fact that we made all-time highs but the RSI did not move above 61.8, if we start pulling back from current levels, this, in my opinion and my research and my work, suggests that RSI 69.1 negative divergence is the strongest type of negative divergence. In other words, failure around here and a pullback around here is going to suggest that there's going to be a stronger pullback in the works. Now, the way to fix this is by moving and clearing this 61.8 level on the daily, and by the S&P 500 continuing to record fresh daily closing all-time highs. Quick look at the Dow, and the Dow did bounce at that RSI 50 as it did in October of 2020. It bounced recently here in late September, and we can see over the last, let's call it, month or so, it's bounced on this RSI 50 and holding. So again, we can also see on this Dow weekly chart that there is a line that we can watch as future reference point for support or failure. It is this line here, connecting recent RSI lows on the Dow weekly chart. It held this 2 weeks. So as long as this line is being used as support, then this is still good enough to stabilize the Dow and potentially offer the Dow a chance to break out on the weekly. And again, if the S&P 500 starts pulling back, this line should eventually break. If it breaks, that's a serious break and could signify, if it breaks, the probability of a stronger push down. For now, the market closed with support exactly where it needed to, and so we can assume that the market net, based on the current evidence, is still sideways to outright bullish. Now the Nasdaq, and I'm just going to draw the line because I've talked about this over the last couple of weekends during the weekend market analysis video. So there's this line here, and again we can see that this is around and above RSI 50. Market's been bouncing on this area. We can see that this was where we break out or move above this range in April. The market hasn't been back to those levels since this short-term breakout there. So we take that area, which is this blue line again. Remember, this is the 2-year weekly for the Nasdaq, and we bounced on this line or close to it over the last year and a half. We bounced here again, and the Nasdaq over the last month has held this area twice. So as long as we're above RSI 50 on the weekly, and as long as we are holding this line, then the Nasdaq should continue being stable to bullish. And again, just as we've already observed, a future break of this area, movement below RSI 50, when it happens, is going to be a sign of a market with an appetite for lower prices. Again, just in conclusion here with the US major markets, the Nasdaq still, since October of 2020, the Nasdaq over the last year plus has been trading above that bullish monthly threshold, that threshold being above RSI 69.1. So the Nasdaq still remains strong and bullish, and we can see that, in fact, this is still a continuation of the breakout that we had in October on the monthly chart for the Nasdaq. The key here is the Nasdaq continuing to stay above 69.1 on the monthly is a sign of a stable to bullish general market. Now, taking a quick look at the cryptos, we can see Bitcoin here, and this is 3 years of weekly data, 3 years weekly, and Bitcoin is aware of this RSI lows line on the weekly, and we can see that as long as it's holding above this line and bouncing, then this is exactly what is needed if there's going to be a future breakout for BTC. So if there's going to be a future breakout, it is working on a new base, and it needs to stay above this RSI lows line. This trend line goes all the way back to February of 2019. So all the way to February of 2019, connecting all these lows of the RSI on the weekly And this past 2 weeks, we held that line. So above the blue line is good. At some point, just like we have started with the S&P 500, if we break this trend line, then we are going to be with an appetite and we're going to be open for a stronger move down. So right now, the weekly chart is offering exactly what the bulls want to see as far as the cryptos are concerned. As far as Ethereum weekly is concerned, we can also see that this trend line has yet to be broken. We can draw it this way, or we can connect. This is 3 years of weekly data. So 3 years weekly. And we can also draw another trend line connecting recent lows. Should be something like that. And again, we can see that just like Bitcoin is holding its weekly trend line support, so is Ethereum. But more importantly for Ethereum is the monthly chart, where we can see that the monthly for Ethereum continues to be above 69.1. So as long as the monthly, as we've been pointing out throughout all of this process, all this move in Ethereum since November, all of this move has come because of the RSI holding above 69.1. So as long as Ethereum is above 69.1, we give the benefit of the doubt to market bulls. Now, if Ethereum is going to be a fresh momentum buy signal, then we need to see a breakout above the recent monthly closing high, again from the end of October. A breakout is needed on the monthly if Ethereum is to stage another strong push higher. The most recent breakouts, which we were fortunate to capture, took place. For example, there was a good entry here with a breakout alert sent to subscribers, and another breakout alert that took place here. All of this we were able to capture because they were good breakouts after multiple months of rest. So, in other words, the same formula is going to operate here. If Ethereum is going to give is to give a fresh buy signal, it needs to break out. And as long as the monthly RSI is above 69.1, it's still a good market. Keep in mind, the MACDs are still trading at 3-year highs as far as Ethereum is concerned. Again, so Ethereum, if it can break out, is definitely going to meet the minimum requirements for the ultimate Muathe breakout. Links are going to be in the description if you're new to this concept. Remember, the last big move in Ethereum took place in 2017 into early 2018. All of that move took place because the RSI was trading and held above 69.1 throughout the 2017 bullish run in Ethereum. So the same thing also here. Since October of last year, Ethereum has been holding above that magic threshold of 69.1. And so what I'm getting at here is Bitcoin also, if it's going to do well in the short term, is going to need to stage a fresh breakout. And we can see that right now the RSI is below 69.1. But what is needed here is a fresh breakout above and about that 61K-ish area, which is the monthly closing high from the month of October. So whatever exchange you are using, could be Coinbase, Bitfinex, Binance. It's the monthly closing high. The monthly closing high from the month of October is the fresh breakout buy signal for Bitcoin if it can get there. So for those of us who play breakouts, Bitcoin has no interest until it moves above the recent monthly closing high. And again, a good understanding of this is Bitcoin would have to move back above RSI 69.1 if the cryptos are truly to recapture their upside momentum. Failure to break out, failure for the RSI to hold 69.1 means that this is still a sideways to down market as far as the cryptos and Bitcoin are concerned. Again, we see a good example of the power of RSI 69.1, as we can see here when Bitcoin was moving in 2016 into 2018. All of this move took place because the RSI was above 69.1. The most recent move from about 10,000 all the way to 65,000. So 10K, 65K took place because the RSI jumped above 69.1. So if Bitcoin is going to be a new momentum winning instrument, it needs to break out in price, and the RSI on the weekly needs to move above 69. On the weekly, but especially on the monthly, the RSI needs to move back above 69.1. By the way, I should point out, I'm seeing some cryptos break out. And so if you're interested in the breakouts that I'm watching in the crypto landscape, and if you want to get the alerts for any fresh crypto breakout, you can consider subscribing to my service. No pressure if you don't want to. I'm just noting an observation for those who have an interest in finding what cryptos are breaking out in the current market and in the weeks and months ahead. That's it for now. I know I've skipped some instruments that I normally capture. As I said, this is going to be a short version of my regular weekend market analysis video. I wish everybody a happy, Merry Christmas and a prosperous 2022 and beyond. And so it is. I am Eric with Muathe.com, and I wish you all the best. And I leave you as I found you, in the power and in the light of the one infinite creator. Go forth and rejoice in the power and in the peace of the one creator. Love and light. Adonai. Namaste. Mwah.